What do you do with the whole infrastructure focus side in India? Because stocks like L&T, BHEL, they've been performing quite miserably over the last few weeks. Would you buy them, or do you think that's still a difficult call to make?
I think that is still a difficult call to make. If the budget had done more to address some of the infrastructure concerns, we probably would have started pushing some of those names. BHEL in particular is looking quite attractive on valuations at this point. But the budget seemed to focus more on raising expenditure for the poor, so it's still more consumption-driven rather than investment-driven. So we would like to see, I guess, more action maybe on the investment side. Or another catalyst could be if the RBI, steps up their rate cutting. I know the governor has gone to say that inflation is rather sticky, but we tend to use a 3-month moving average for inflation, which we think is a leading indicator. And on that basis, the WPI has already come down substantially to 2 to 3%. So we are a bit more relaxed about inflation, and therefore we believe there's actually more room. So again, if we do see further rate cuts, then again that may help some of these investment-related stocks rather than the consumer-related stocks.
Reliance flared up for a bit post the results, which were good, but then has sort of gone to sleep around 800 again. And everybody knows it's tried investors' patience over the last 2 or 3 years. Are you convinced that this is going to be the big comeback here for Reliance?
I mean, again, because I'm valuation driven, I mean, we added Reliance in January of last year, same time as we added Tata Motors, 3rd of January last year. Reliance, we added because the price to book is below 0809. And in fact, if I look at the region, there's only about 2 stocks in the region where price to book is still below 0809. So not just in Indian context, even in an Asian context, Reliance, certainly on a valuation basis, looks attractive. Our bottom-up analysts also see the stock is starting to deliver. We are starting to see earnings upgrades. So we hope investors will notice the change in fundamentals and the stock performs a bit better than what it has done so far.
What are your expectations from earnings in general? Because this quarter which went by was quite patchy. Many companies disappointed. And people have been trying to catch this trough for a while, that this is the bottom and after which upgrades will start. But for the last 6 months, it seems like an extended trough. We haven't started seeing the upgrades yet.
Yes, I mean, if you look at earnings revisions in India, January was up, February was down. We're actually quite confident, actually, that we will see earnings upgrades. Just today, our analyst has further upgraded Indian tech earnings revisions, and particularly for some of the bigger stocks like TCS as well as Infosys. So at least on the tech side, you're seeing earnings upgrades. Financials, certainly there's been a bottoming. Some of the energy stocks are starting to see earnings upgrades as well. So I think, as I said, overall, we think that we are close to the bottom, and our view is maybe even seeing kind of earnings upgrades over the next kind of a few months.
So what's the biggest risk to your hypothesis that this correction is to be bought in India?
I think the biggest risks are firstly global. If we do get a resurgence of European concerns, it's always difficult for Asia, let alone India, to perform. The second is obviously we've got the US budget sequestration. If that leads to a pullback in US data, particularly capital spending, not just a pullback in India, but also a pullback in Indian IT, which we are, as I said, pushing quite hard. So those are 2 global risk factors out there. I guess for India specific, there's still this concern that it was one of the better performing markets last year, certainly among the BRICS by far the best performing. So whether you get a bit more of this consolidation period before we do get the next leg up, macro specific factors, inflation we think has come down, but maybe the year-on-year numbers remain more sticky, so we don't get the catalyst in the form of rate cuts. And we're always hoping for a bit more on the policy front. A little bit disappointed by the budget. It would have been better to see a bit more, I think, on the infrastructure, on the investment side, rather than just consumer related programs. So those are probably some of the risks.
So you still hold that this could be another year of 20% plus gains, or that view needs to be tweaked a bit in the light of the recent fall?
No, we're still sticking to the view of 20% gain. In fact, even if you look last year, most of the gains came in the 4th quarter for us. Now we're hoping we don't have to wait that long to get the 20% return, but no, we're still looking for a target of 650 for MSCI Asia ex Japan, which is a 20% return.
What's your call on China? Because that started creating a lot of apprehension in the region after its recent fall in property shares, etc. But In an Indian context, both in terms of what it could do to commodity stocks and generally this pool of money swirling between China and India, what ramifications could it have?
Okay. I think China, like India, started the year very well. Was up 6 or 7% in the first three weeks, and then it's kind of rolled over. The big surprise, including for ourselves, has been the fact that they've started to tighten. We did expect tightening, but not so quickly. Now, having said that, we actually think this is preemptive tightening, which in the short term is seen as negative for markets, negative for commodities. But if it is successful in engineering more of a soft landing over the longer term, we actually think it's quite constructive. Because obviously the mistake in 2009 was to tighten too slowly. And I think they're trying to rectify that by tightening quite early. So I think the property stocks have fallen because you've actually tightened property quite quickly over the weekend. They announced kind of further measures. So like India, we are actually suggesting buying China also on the dips. And in fact, in our report today, not only has India joined, but also Shanghai has joined the cheapest four at the same time. So we're actually suggesting both markets do look attractive.
So you don't think there is a possibility that after a good 2012, 2013 turns out to be an off year for emerging markets and then it starts building again in 2014?
I think after a 20% return, there's always, in my view, a period of consolidation. So I kind of feel that maybe what we are seeing at the moment is that period of consolidation. I think the risk that we don't get a 20% return is, as I mentioned before, if we get European concerns, what I call the tail risk, starting to flare up again. Emerging markets, unfortunately, always perform poorly if there is a risk of trade. Secondly, if the US budget cuts, have a big impact on the US economy and we get a slowing, that's again, quite negative for emerging markets. And then obviously if we do see emerging markets tightening while developed markets are not, and policy is very easy, that could be another reason for us to kind of underperform. But we feel that given the valuations, and we like Asia and some parts of EMEA within GEM, we feel actually the backdrop is still, as I said, rather supportive. Now China, as I mentioned, has tightened earlier, but we construe this as preemptive tightening, which is better for the long run. May not be that great for the short run. So there's certainly risks. But we are known to kind of put our necks out, so I'm very, very happy to stick with our call for a 20% return.
So what would you tell your clients to buy in India, aside of IT, which is your clear favorite at this point, and stocks like Reliance and Tata Motors? What else is the India basket looking like?
We're also suggesting, I guess, some of the banks, like Bank of Baroda, for example. Okay. Again, if we are right that inflation is cooling, rate sensitives like the banks tend to perform, and that's the stock that the analyst Ashish likes. Those are basically the 5 names, because for me, I do India in a regional context. Sure. 5 names take you to an overweight position.
Sakthi, a pleasure. Thank you very much for your time.